Welcome back to the program. Steve Nwachukwu is with me right now. He's the Managing Director, Steward Asset Management Limited. Hello, Steve, and welcome to the program.
Thanks for having me, Nasi.
Let's dig in.
Yeah.
So
quite
much.
A couple of them.
Quite a couple.
Yes.
But
well, it's the earnings season. It's expected.
It's expected.
It's part of the rules that you must make available your
all the companies, in fact.
All the companies. If you don't do it, you'll be sanctioned. So
you'll
a couple of them that have not done have also written to the Nigerian exchange to give them that extension of time, perhaps to put some little things in their books together.
And if they don't do it, they will be fined.
That's the rule.
The penalty.
That's the rule. That's the rule of the game.
Of the game.
Yeah.
There's a referee.
That's why it's a quoted company. That's the essence. That's what will boost the confidence so that we investors, the general public, will know the health of every company. If you are in a loss position, let us know that you're in a loss position. If you are in a profit position, let us know. Let's have your books. That's why it also has to be audited by a external auditor, not just your own. I was
coming to that too. Have you seen, like, over the years? Because I remember in 2008 or so, yes, around 2008, 2009, there was a book school cooking scandal.
Of course, it happened.
You know, so
well,
should we trust the earnings now coming out from these companies? I know what I'm asking.
I know. This is a quite depth question.
Yes,
it's quite
not
depth.
even for Nigeria. We've seen other book cooking scandals.
Everywhere. It happens everywhere. When sometimes we brokers, we investors, analysts looked at the books and looked at it from the integrity of the books, not just the top and bottom line, what it reflects or what the MDs or the management teams seems to bring out to the public. But we'll look at it and look at the figures. Sometimes, in fact, what I have here, I saw some in some of the consumer sectors, you are saying that cost of sales is actually eating deep in their bottom line.
That's cost of sales.
Yes, cost of sales is actually expense. What is constituting this expense? Why are we having increase? Are you increasing the salaries of the workers? Are you increasing the salaries of the rest of the chains of your production? Or is it just raw materials that is causing this cost of sales higher? We've seen it in the breweries, we've seen it in the consumer goods. A couple of them are increasing in their cost of sales and making most of their bottom line, which is their profit after tax, not like as impressive as it should be. So the books are there, and people will actually look at it, fault where you want to fault it. That's why government will also look at your book and look at what you declare. Are you really declaring the right thing so that you can pay the right tax to the government of Nigeria? So these are all people playing in the market. Everybody is looking, investors is looking, government is looking at the book. So when you cook it up, you're going to pay tax on it. When you also that
means you won't pay adequate tax.
You will not pay adequate tax. So from that side, government is looking at your books. Are you sure this is your books? Let's look at it. What did you do? That's why your books is always compared quarter by quarter or quarter by quarter or annual by annual. So like what we have now is second quarter. You're going to compare it with what happened either the first quarter or the last second quarter of 2020.
Okay, now let's talk generally. What have you learned from the earnings that have so far been released? I know there are many, but what have you learned? Is there like a denominator of what you have learned so far from the earnings?
Of course, there are risks. There are risks.
You know, talk to me about that.
Yes, you know that we are in a quasi recession. Let me use because the figure. Yes, because what we have.
We are not in, but we are like a recession.
Yes,
but we are
like in recession. Yeah, exactly.
Yeah.
So the earnings perhaps beats what is expected in the sense that the turnover is increasing. The bottom line in some of them are increasing and decreasing depending the sector. In fact, most of the banks, their bottom lines are actually dropping. Also, their top line is also dropping. And some of the consumer goods, rather, their top lines are moving up because the cost of almost of these consumer items that we use are all going up. So it will reflect in their cost of sales, or it will reflect in their gross earnings, the revenue they earn, because they've actually increased one item. Take, for instance, anyone selling any of these consumable items, like those, let me not mention a particular name. There is no item in the market that have not actually like doubled itself or gone up by 30, 40, 50%. So that actually reflected in most of these companies that had in the consumer sector. their earnings, their top line have actually moved up. Then in the bottom line, this is where we, the investors, are looking at, because it's what you earn, what you declare, profit after tax is what you will not pay dividend to shareholders. So most of them are not, their bottom lines are not impressive, but some are also impressive.
Okay, let's interrogate further what you just said. In terms of the consumer goods, I don't want us to call names, but
yes,
of course,
that I try to avoid.
Yes, consumer
those
goods are those goods
there.
that you know you can't do without. You use them like on a daily basis. You know, some across your household items and all of that. And you talked about inflation definitely affecting the
yes.
prices. Are you seeing? We've seen the top line of those companies higher. Is there a way in there that inflation impacted their input costs? I don't know if you understand what I'm trying to say.
That's the aspect I talked about, the issue of their cost of raw materials.
Yes, okay, go ahead. I want to
the aspect of their cost of, let me take for instance, a company like Unilever, their gross earnings rise by over 10% from 14 billion to 19.7 billion. And profit after tax also, this is the only company among most of these consumer goods that have actually done well in their bottom line. It came from a negative position of 1.6 billion to a positive position of 1.2 billion. Very impressive. Unilever have been in loss position for a couple of years. Now let's look at what you talked about, this cost input and the rest, or the gross earning. What we have here is that Unilever actually grew its top line, which is the gross earning, from about 14 billion to about 19.7 billion. So it's an impressive. So it also reflects on this aspect you mentioned, the issue of their cost, issue of the prices are valuable there, the inflation eating up on most of.
Yes, I hope I'll be able to put this well so that you understand what I'm saying. Let me put it as simple as possible. They have a higher top line.
Yes.
If we're having inflation at 17.75, so it will affect their cost of raw materials and all of that. Shouldn't it affect that top line negatively? Because even though the consumers buy things at exorbitant prices now, the companies would take that money. They are importing like majority of those materials.
Raw materials.
FX valuation would affect it and all of that.
It's more of the FX than the cost of material. If you are looking at, although the cost of material is also the FX
component of it.
Is what you use to buy your cost of material. So the end point is that you actually paid more in the raw material you use last year than what you are using today. You actually paid more, but it's not coming from the source. Take, for instance, you buy a raw material from China. Prices have not actually increased from the factory you are buying it from China. But actually, the source of raising that dollar you needed to buy have increased. So buying it is also equivalent that, let's assume we buy a ton of whatever material you needed at $1 million. And now you are buying it, you are raising dollar. The same dollar you raised at 1 million, you are now raising it at 1.4, 1.3. Your costs have actually invariably...
The Nigerian component, not the Chinese component or the company's component. That's what you're saying.
Exactly.
But it would also get in...
To the consumer.
Yes, to the consumer, the end users.
Exactly. It is pushed us to us, every one of us. We are always in the market, so we are the one bearing the cost.
Okay. Can you talk to me about some other sectors? We talked about
even in the consumer, we also have the USC. It also did well from a low as 36 billion in turnover to 46 billion, although down in profit from 1.1 billion you recorded last year to about 762 million. Then another consumer goods we also have is Cadbury. Cadbury is there as a consumer good, increased by turnover in top line from 15.9 to 18.5. Now in the bottom line, that's why I'm talking about now. The bottom line, most of their bottom lines are not impressive, but top lines are all impressive. Down in a loss after tax, loss position of 516 million from a profit position of 536 million. So, like I raised concern, my remark on that is rising costs of sales. Rising costs of sales. So this is where investors will actually question, why is your cost of sales rising? Is it the haulage aspect that is rising? Is it that distributors are asking more? Why is your cost of sales rising? Or is it that you actually increase the salaries of your staff? This is where the management team needs to answer most of these questions.
Let's talk about some other sectors. Let's talk about the cement sector let's talk about the telecom sector, because at least in the last few days, I've seen that the market has been bullish, and it's been bullish because of trading in the shares of the telecom stocks and some banking stocks. Let's talk about the Dangote Cement. You know, for me, was it first quarter of this year? So I was quite surprised when they brought out their results for last year.
So fantastic results.
In a recession, in a lockdown, were we building houses? Were we constructing during lockdowns?
Of course, the data from the
and not just Dangote Cement, Bua Cement and likes of them.
Bua Cement, Lafarge Cement, all of them are all doing well. Their top line and the bottom line are all seeing impressive numbers. Like Dangote had about 44.9% increase in the top line and had about 51.58% in the bottom line, rising from 690 billion turnover in 2022, 6 months ago. 6 months of second quarter 2020, rising from 690 billion to from 476 to 690. Then the bottom line rising from 126 to 192, about 51.58% increase.
That's for the second quarter. But for the first half, Dangote made, I think, 414 billion naira.
In turnover?
No, in profit. That's for first half.
Not profit, in turnover, gross earning.
I don't know the data you're looking at. I'm looking at mine here.
But what you are saying is gross earning, that is a turnover. But in profit, it actually made less than that in the first quarter.
No, I'm not talking of first quarter, I'm talking of first half.
Okay, first half.
First half, yes. You are right for the quarter which you're mentioning. Okay, let's dig deep into this cement,
Yes,
sector.
I think, like I said earlier, the data from the Nigerian statistics also shows that the real estate actually even during the recession, we are the best performing sector.
Yeah.
So people actually, maybe because their businesses were not going, the result in building, a lot of building activities are all going on. So we saw a large demand of such very building materials, which the chunk of any building is the cement. The chunk of whatever you use for your building is cement. So now this is reflecting in the books of these quoted companies like the Lafarge, the Dangote Cement, the Bua Cement. All of them recorded a very impressive turnover increase even in their bottom line. So we saw actually that during the reception, this sector, the real sector, was actually doing well. So it reflected in their book as much.
I don't know why, in other countries, the housing sector was not doing too well, or the construction sector was not doing. But it's like in Nigeria, we always define economic.
I think one of the fastest growing sector should be the real sector, because we are still having deficits in housing.
Real estate sector.
In the real estate sector, we are still having a huge deficit. A couple of millions of Nigerians.
Babatunde Fashola disagreed, I think, the last time.
Well,
some weeks ago, and said, there's no housing deficit in Nigeria.
Yeah, but I think his argument...
Where is that figure from?
Yes, the argument is more of that livable houses. You have a couple of houses right here in Abuja. You drive through Sokoro, you see a couple of houses.
Empty houses.
Empty houses. Trying to tell you there is no deficit in that nature, that the houses that are available in Nigeria will actually take care of these Nigerians. It's just a question of the fact that these buildings are not being occupied. So, but in the reality of it, the Nigerians that needed it cannot go and bug into the people's house and start living or start asking for rents that they cannot pay, because most of these houses that people are not occupying are actually hybrid estate or hybrid buildings that they can't afford. Some are going for 2 million per annum, 3 million, 5 million. So Nigerians, the deficit is more actually on this area that people can afford, like the 1 million, the 500, the 200, the 300, the 100.
Let's talk about the telecom sector. Airtel Africa and MTN. Do I have MTN here? Yes, MTN. We're seeing that these companies also made money. Yes, so to speak, in dollar terms, for that matter, in dollar terms. But I'm also wondering how the lockdown affected these companies. Not just also the lockdown, the NIN SIM card registration. That most of them lost about 8 subscriber base. Yes. So how does it reflect in their earnings?
Well, what you have to understand is that they are losing from the voice, and they are gaining from data. data actually constitute much of the profit we saw here reflected in MTN, rising turnover by over 24% and rising profit after tax over by 49.4%. So it's actually they are gaining from data. At least you and I understand that Zoom meetings are always going on everywhere. People on lockdown, people at home, people don't have more there, but using their social media, the data are being consumed on daily basis. So they actually earning more from the data than the voice call. So actually it has an increase. It has reflected in their books as much. So NTN actually, because of what the size of the profit, they are paying a dividend, an interim dividend of 4.55 kobo to shareholders.
So that means if you are a shareholder of MTN, that's the amount you get times the number of stocks
units you have.
Yes. Okay. What else is there for us to talk
Julius
about?
Berger is here, Nigerian Breweries,
I think Julius Berger reported a loss.
No, very impressive results too, yes. Okay. Very impressed. Actually, the loss was as at last year. They were in loss position as at second quarter 2020. But in this present quarter is over 4.7 billion. Over 4.7 billion profit after taxation, which is quite impressive. The same is also reflected in Nigerian Breweries, up by 33.7% and 33.1% respectively in the top and bottom lines, which reflect a rise in the EPS, the earning per share, by 96 kobo against 71 kobo recorded in the last second quarter report.
You talked about earnings per share. Now I want you to explain what that means for my viewers, because we have those. You are smiling.
Yeah,
you know the show is a school.
It's a very
earnings per share, that's EPS.
Yes.
We also have price earnings ratio. Yes. Those are terminologies that we use here. Price earnings ratio. Well, then we have dividend yield. So I want you to speak about that.
Okay, I think for the purpose of this discussion, we're actually reviewing the healthiness of companies. So these are the yardsticks to determine where this one is going, where is not going. After declaring or whatever be the profit, for us as an investor, the way we can determine and analyze your healthiness is to divide whatever profit you have made against your outstanding units of shares. That is what is called earning per share. So using this profit, you go and check the volume of shares in circulation, or the volume of shares issued by that company against the profit. That's what you get as earning per share. So it guides you. Like now, Nigerian Breeze is having a 96 kobo second quarter. In its second quarter, 96 kobo earning per share. This earning per share means that this is what can be paid if they have the policy of paying 100% of their earning. And I don't think there's any company that has it. Some has 80, like UAC is the only one that has something close to 80% to 75%. Okay. They must pay. Whatever they earn, they must pay. It's a policy. That's also what investors are looking at. Oh, this is a good company saying that whatever I earn, I will pay not minimum of 70 to 80%. Some banks are doing well. Most of the first-tier banks are paying nothing less than 45%, 50% of their earnings, whatever they earn. If they earn 1 million, they are going to pay 500,000 and put the other ones in reserve.
Steve, I should say we should do this again because there's no time. You know, of course we can analyze all the companies listed on the exchange.
Of course.
But we'll try as much as possible.
Okay, but let's just take one insurance sector.
No, I think we should do that some other time.
All right.
Because we have something else to take. Thank you very much, Steve, for coming. We'll do this again, I promise you that. All right, I've been